Never overlook the power of simplicity. My friends, we keep it as simple as possible. Why? So we can see what's happening. We don't get confused by the trees and don't see the forest, and vice versa. Again, keeping it simple, stepping back on Wednesdays, as we talked about yesterday, and viewing the market as a whole. Doing that once a week, very, very important. Filling out your trade worksheet, daily market worksheet, weekly market worksheet once a week. All of those are very, very important. And again, the book is available. We have an autographed copy waiting for you. Let's jump into these charts. Stocks are up for the day. Bonds and gold down the same amount, 0.17%. Bitcoin up some. How do we see this week shaping up so far? We have a green up candle on the S&P 500, but we still have the overhang of the weight. The weight pushing the price percent oscillator slowly away from the red signal line, derivative oscillator devolving. We do have a green up candle that's formed. So again, a bit strange. We didn't have the derivative oscillator flip over with the price percent oscillator, which you always want to see. So that was a little bit of a weakness there going in. We look at what's happening on the latest 2-day candle, which finished forming. We can see the price percent oscillator still negative, derivative oscillator negative, losing downward momentum. Look at the previous high was 220.32. This high, 220.71. So a little bit higher as far as where things have touched, but not enough to have a crossover going up. So we still have that weight pushing the market down. All things being equal, the market tends to move in the direction of the largest chart. What do we see for the last 2.5 days? We see really a sideways slide as things may have topped on that half-day chart. Push through the half-day trend line, still above the weekly and the 2-day. Price percent oscillator still going up a little bit in positive, derivative oscillator positive. So we'll watch, wait, and see. Again, that weekly vertical crossover still in effect, 2 days still down also. We look at the S&P 500, go from the S&P 500, which again was up 0.19, to the NASDAQ 100, which is up 0.35. Now again, just 1/3%, but again, we do have a green candle forming there. The weekly vertical crossover still pulling away from the red signal line, derivative oscillator heading down, 2-day chart, still negative. Price percent oscillator is heading up, tapped on the weekly trend line, but did not close penetrating it. Has, of course, blown through in the last 4 days the 2-day trend line. So we'll continue to watch and see, but still have the weight of that down pressure. And again, look at that. We can see where the half-day chart is hit right along that weekly trend line 3 times. Is it going to blow through it tomorrow, or is it all going to come down? Price percent oscillator still heading up, derivative oscillator losing some momentum. We shall see, my friends. We shall see. Shall be interesting to see what happens in the market on Thursday. Let's look at bonds. Bonds down for the day as stocks were up 0.17%, as I said earlier. Bonds crossed over, going up with that weekly vertical crossover back on the week ending the 30th of April. And then, of course, subsequently slid sideways and down for 2 weeks, trying to gain a little momentum. Price percent oscillator pulling away from the red signal line, derivative oscillator gaining some momentum, but not hitting its prior peak yet. 2-day chart, we can see where we had a bounce off that 2-day trend line. We have 2 green up candles. Price is still again, trying to move up. I guess I could attempt, now that that candle's drawn, to draw us a better 2-day trend line. There we go. And we'll continue to watch and see where bonds go. We can see where things popped up in the morning, then lost some of that energy in the afternoon. That's where a down movement came from. But price is still above that 4-hour and the 2-day trend line. Let's go to gold. Down also 0.17%. We'll start at the weekly as we always do. Nice green up candle hitting a higher high, moving up for the week. Price percent oscillator pulling away from the red signal line. Derivative oscillator heading up. Price above that weekly trend line. 2-day price moving right up that 2-day trend line. Price percent oscillator heading up. Derivative oscillator gaining upward momentum. Looking quite nice. We look at that half day, and at the end of the day, it devolved and is trying to cross over, going down. Price percent oscillator looks like it may have crossed. Derivative oscillator still positive, but look at price in and of itself is right there above that 4-hour or half day, rather, 195-minute trend line, well above the 2-day, well above the weekly and above the 2-day. So that's where we are on gold. Gold, keep going, baby. Go for the sky. Lastly, we look at Bitcoin. Bitcoin, of course, hasn't hit the low it hit last week, but still solid red down candle. Price percent oscillator spiking down. Derivative oscillator going down. 2-day chart. Again, maybe Bitcoin is hitting a bottom here. Maybe somewhere around, what is that, the 37,000 mark or so? Maybe so. But that price percent oscillator still jamming down, and the derivative oscillator on the 2-day. Look at the half day, we can see again, maybe trying to reach some kind of bottom up in the up during the day, and it did cross over on that half day. So at least it's the first crossover going up on any chart on Bitcoin in a while. That is good to see, but that one crossover doesn't mean it's over. But we will watch for a potential bottom forming. We can see that potentially on the half day and the 2-day. Maybe the weekly a little bit too. That's where we are, folks, as we end the day. God bless you, my friends. All the best from the whole team at Charting Wealth World Headquarters.